What's up, everybody? It's Dave P. RJ Pepino with the cream. In this video, we're getting down to the brass tacks of a negotiation technique that we have found extremely valuable. In my opinion, it's pound for pound the best way to get a smoking deal on a property. There's a lot of seller negotiation stuff on YouTube. There's a ton of courses out there. We've subscribed to most of them, and they're good. I'm not here to knock any course, but this video is kind of like just a shot. It's a quick bullet of one thing that we do to get great deals on properties. We're going to be doing a deal review. Nice little, over 100K spread on the deal that we're going to be sharing with you. This deal is in escrow right now to sell. We're ending up making about $61,000 on this particular deal. Didn't lift a finger. We have not done any rehab or remodel. Those are our favorite kind of deals. And that's what we're going to be getting into on this video. As always, we appreciate any encouragement. If you like, share, subscribe. If you know other entrepreneurs who could value or benefit from the videos that we produce, we would love the support. RJ, what's going on?
The vibe is good, and I'm here today, kind of a different view. I'm at the home office. It's quiet. Kiddos are at the park. We're getting ready to have our annual kind of family vacation, so I'm looking forward to that. And I'm in a good vibe. This deal is an amazing deal, and there's a lot of layers to it, and we're going to get into that. But it's an amazing how if you can think about how you can collaborate more than compete, you're going to get deals like this coming in your inbox every day.
Yeah, this actually came by referral from another real estate investor. So there you go, everybody. We are here to do deals with you. We would love the opportunity to JV. In fact, RJ, you don't know this, but somebody came and knocked on my door, a young kid, young buck. He was selling some insect extermination services. I recruited him. I'm like, you're good at knocking on doors? Let's get you in real estate. Got the guy's Instagram handle. Always be closing, everybody. I mean, if you're willing to knock on doors and be an exterminator and sell extermination services, you should be knocking on doors and doing real estate deals. The spreads, I promise, are far greater. So here's the deal. This is a good part of Columbus. This is known as Grove City, Ohio. Good suburbs. The suburbs, guys, big rips. Our biggest rips in the single family house business have really come probably from the majority of the time suburb and suburban properties. Would you agree, RJ?
Yeah, I remember a deal specifically. You're standing in the kitchen. There's a hole in the kitchen, which was the roof at that time, and it was a house that smelled absolutely terrible. And that was, I think, in either Canal or whatever, but nice suburb part of Columbus, Ohio, and I think we had a really big rip in that one. That one comes to mind because that was a deal that we did. We still have in our in our portfolio.
I think I have the OG pictures of that particular deal. I know which one you're talking about.
Yeah.
And you should see the roaches in this particular house. It was disgusting. Suburbs, guys. Suburbs are great when you find that's a great example of finding the ugliest house on a pretty block. You find these rough ones. This particular one is not that rough, but it is a rough situation. And that's what we're looking for as real estate investors is the opportunity to add value to either a property where you get a lot of upside by doing a value add or add value to somebody's situation. This was a divorce situation and they just wanted out. They wanted cash. When it comes to a real estate deal, when it comes to a divorce, it's much easier to split up cash than it is to split up a property. So they just wanted to cash out, and this is an example of the deal. Nice 2.5. It says, so here's a nice little interesting thing. Don't trust always Zillow. Zillow's really good when it comes to a lot. I'm not going to knock Zillow, but it says 928 square feet. That's inaccurate. It's actually over 2,000 square feet, this particular property. Look, you could see, 2-level home. It's not 928 square feet, but you see the Zestimate on this one is 351. RJ, what did you come up with as far as comparables go on this?
So I am going to share my screen. Dave said hit something really, on the head there. It's like you gotta look at it and not only You know, you can use Zillow, you can use your auditors as a reference. You got to pull up the MLS, but this is what it really looks like. What was the seller's Richard Green that you were talking to?
Yeah.
So yeah, we look down here, and it's actually some really good things to note is it's a 1990 build house, 2,100 square feet, for 2.5. This is like the ideal house that everybody wants to buy. Everybody wants to buy this house. It's an affordable house for 2.5, attached garage, and so much so that even the hedge funds want to buy these houses. So there's multiple exit strategies on this place, right? There's a good look at it. So always look around into the auditor site to see what properties are listed under, so that you can double check your stats. So this is the MLS. Let me just pull this up. So I did a search. There's our property right here, the star. And then all around here, so there's a lot of transactions in this particular pocket, as high as, let's see, the ones that actually look kind of like our house would be this one right here. Was actually sold on Grove Park. So let's pull this up for $339,900. Probably exact same layout of a house. This one might have a deck. This one's just kind of lived in, not really updated at all. This one went for $339,900. Yeah, definitely just cleaned out. No updates, nothing. And so this one, 11 days on the market, which is a good sign. And this is one that sold back in, let's see here. Let me move this out of the way. 2022. Tail end of 2022. Here's another one. Same similar situation house. So I'm what I had originally told you, it probably, if ours was done up right, it'd probably be around 345 in today's market. That's what I saw this house being worth.
So, oh, go ahead.
To say the least.
What'd you say?
I said we got a really good deal on it, to say the least. Here's one.
We did. So let's get into the deal that we got. We're comping it out around 350. I saw a high comp in there for 380, but we essentially, we're talking, like I mentioned, a divorce situation. And here's the technique, everybody. When you're working with a motivated seller, it is so important to find out what they owe on the property. That, because now you're negotiating with their equity, not negotiating the price of the house. Let me give you an example. I realized that they owed $107,000 on the property, 107. I know it's worth 350. I know the house needs work too, but not that much work. I mean, it needed some work. And in fact, I'm going to pull up the pictures on this particular one. I want everybody to get a good idea. But I found out that they owed they owed 107,000. So I approached the seller and basically started negotiating with their equity. So instead of saying, "Hey, because I mean, I would have been willing to buy this property for like 240." That was like my, because I knew I could still like sell it for like, we ended up selling it. I'll let the cat out of the bag. We ended up selling it for 270. So, I mean, would you guys be okay making 30 G's on a deal, locking it up for 240 and then selling it to somebody for 270? Absolutely. It's a good deal, right? But I wanted to get it as far below 240 as I possibly could. So what I did was find out that they owe 107, and instead of just saying, "Hey, will you take 200 for it?" That sounds too low, because they were wanting they were like any good seller, they were trying to sell me. They were saying, "Oh, there's comps in the area for 380. We got to like," they're seeing the same comps too. I had to use the low comparables in the area, the realistic comparables, to bring them back down to reality. But the real negotiation took place once I found out they owed 107, and they wanted, I think they wanted around 300, right? And instead of just offering around 200 where I wanted to be, I knew they owed 107. So I said, what if, I love those two words, what if, when you're negotiating? Well, what if I could set this thing up where I get you $100,000 cash? You get to walk away with $100,000 cash that you and your ex-husband could split up. You and your ex-wife could split up. You guys split that down the middle. It's a nice round number. And you know what they said? They're like, yep, that's what we were hoping for. Boom. So instead of like them starting out at 300, me starting out at 200, trying to work our way in the middle, it feels like a car dealership now. Instead, let's make it sound like a game show or a sweepstakes where it's like, what if we can get you $100,000 cash? You just boom. That it's a completely different mindset when you get them to visualize $100,000 cash in the bank rather than your offer of, in this case, 207,000 is what we ended up getting the property for. Let me share the HUD settlement statement, because here's another example of how we paid ourselves up front. Quite a bit of money on this.
The idea is, I just want to make sure everybody understands, you kind of knew what houses were going for. Let's just say 350. And then you also knew what they were into the house for, the payoff amount for the house. That's the key thing. And so you're saying, man, if we can get this somewhere in the twos, it'd be a slam dunk deal. Probably the max that you wanted to pay was what, 240? Is it still good?
I mean, I probably would have done it for 250 and made 20 on it too,
So knowing that piece of the this deal where they want, and then throwing it out there, you kind of, this is the stuff that you need to think about and like have already kind of formulated in your mind when going in for the offer. These are the key things: what they owe, how much you think you can get on the backside if you fixed it up, and whoever is getting this deal still has boatloads of equity, like boatloads of equity.
Well, it comes down to RJ, wow, WOW. What is it worth? You just showed us the ARV. That's the first W in wow. What is it worth? What do they owe? Right? They owe obviously 107. We figured that out. And then what do they want? Well, they want 100 G's so they can split it down the middle and get 50-50. Perfect example. What is it worth? What do they owe? What do they want? And then talk about what they're going to get. What they're going to get is that 100 G's cash. So in no conversation did we talk about this purchase price? You can see on the HUD settlement statement here, sales price of the property was 207. We didn't talk about 207 once. We talked about 100 G's cash that they're going to get. But we know that they owe 107. So to get them their $100,000 cash, the price ends up landing at 207. Now look at this. Below the 207 here, RJ, at the top, the next line item is loan amount. How much is the loan amount?
250.
So we're buying it for 207, getting a loan for 250 from a private lender who is happy to lend on this, being that the ARV is 350. And there's some obviously fees and whatnot, title insurance and that whole deal. And then as you can see, the subtotals is that 210. That's what's due from the borrower. But what we came with is the, 250 loan. There's a tax proration. Bottom line, due to buyer, that's what we're looking at here. Due to buyer was 41,554.17. That is a fee that we put in the bank. That's a PYF at its finest. That's money in the bank. Right? Now we have a loan on this property for 250. Now, and what really made them want to go with us, this particular seller, is we got them their cash in like 7 days. That's the power of having a private lender in your back pocket.
Yep,
Not only what's that?
Up 7-day closing, quick, fast.
7 days, baby. Yeah, so we got them the cash that they needed, and they can split down the middle. Let them stay in the property for maybe a week or so after the close, so they could use the money from the proceeds to secure their new property, which they already had. They just had to move. and they were very nice people. And now we have a wholesale buyer for 270. So our buyer's coming in at 270. They're going to pay off our underlying loan for the 250. We got some interest and stuff like that. But gross, we're going to make another 20 on this deal at the end of the day. Maybe net, call it, we make 17 or something like that. But you can see here's a particular deal where since we were able to negotiate a really strong price by getting the seller exactly what they wanted, we're making close to 60 G's. And we didn't do any rehab on this. Zero.
And here's the thought.
Yeah, go ahead.
There's everyone out there saying, well, you could have rehabbed it and made more.
Yeah.
Go ahead, do that. Like, we're not saying don't do that. We're saying in our situation, in our business, where we're at today, where our crews are at, we're going to make that money right now. Now, if you have the capacity to do that rehab, then do it. Like, we're not saying that that's good or bad. What we're saying is it's better to have some options. And so in this particular time in where we're at in our flipping businesses, we would rather have it quick, boom, in our account, and move on to the next deal, because there's 6 or 7 other deals in the current pipeline right now, and other rehabs that we're actually doing right now. So when everyone tells you, well, arguing that a rehab is better than a wholesale deal, it really depends. It really depends. It's just not one way. You know what I mean? And there's also another argument that people will want to just all wholesale. Okay, that's good too, if that's what you want to do.
Well,
the reason why we're presenting this deal is because there's many ways to skin this. And this is what our opportunity was today, is to get this, quickly flip it, take advantage of the market. We're in a pocket where there's high demand for this house. So we knew that this was going to be a slam dunk for whoever bought it. And it is. They're probably going to do the work themselves and then, get all that equity and upside if they do it right, because it doesn't need.
They are going to do a great job. They're great rehabbers. But here's the thing. In this particular scenario, I really want to emphasize the fact that we had that private money ready to rock, and that's what made them enticed to do this deal. They had to close before the 30th of last month because they had to secure this new townhome. There was a whole story behind it. So if we were just wholesalers and we were not able to get this deal done within 10 days, it would have put the deal in jeopardy. If we didn't have the private money lined up and the confidence to say you will have your cash before the 30th, that's what made them go with us. Like, there was no doubt that we're going to get this done, because that was kind of part of the sales presentation as well. Is like, what you don't want to do is work with somebody who really can't get this done. They drag this thing out to the 30th when you're expecting to close. Lo and behold, they couldn't get the money, and now you're in a rock and a hard place, right? Yeah. So with us, based on our track record, we have a guarantee we're going to get this deal done for you. And that's what made them sign the dotted line at the end of the day. And we got a great deal. They got a great deal. They got their money, and that's all they care about is take hands, move on. Gave us a testimonial on this deal. And our buyer's getting a great deal at the end of the day as well, because they're buying it for 270. They'll probably put 30 into it, all in for 300. And, they're probably going to sell it for 350 or more. I'm sure they're going to do a nice job. Beautiful street. So everybody wins. These are the ideal real estate type of transactions. And it goes back to the old saying, you make your money when you buy. You make your money when you negotiate a great deal, and you get paid when you sell. In this case, we got paid when we secured the private money loan, paid ourselves first, making more on the back end. And just another example of what we teach here in the Cream community. If you're interested in taking your real estate business to the next level, we're here, guys. We're in the public. We're really doing deals. In fact, one thing I'd like to show, if you're considering hiring a coach for your real estate business, it makes a lot of sense. Let's take a look at this screen here real quick. It makes a lot of sense to work with people who are doing deals today. There you go. Do we have a date on this? Here's the date, everybody, in the upper right-hand corner. 5/26/23. This isn't and today's 6/9/23. This is a couple weeks ago, everybody. This isn't some old deal we did back in the early 2000s that we're regurgitating here. This is this week's feast, right? We're always hunting and we're always feasting. So, RJ, anything else?
No, so a couple things to take away from this deal. You want to play in price point that's in demand. This is an in demand price point, right? 350 is super affordable. A lot of loans. This is what we talk about, affordable housing. The area is good. It's Grove City. In our particular pocket, we consider that the suburbs. Private money will allow you to close a lot faster than going and getting a loan, even hard money, blah, 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 blah. You will need to have private lenders do your deals. Our program, if you're interested in that, send us a DM, get a hold of us. We're all over social media, RJ at RJ Pepino and at the Real Dave P. You need to have these three key pieces, and then you also the main part of this was asking that important question: how much do you owe? Know how much the person owes. This one, it just so happened to be 100. Dave knew that going into the negotiations. What if you walked away? What if, right? What if you could walk away with 100,000 cash? You split up. It's an even number. Could he have used a lower number? Yeah, he could have. Right? He could have. But
Don't be greedy.
it took the bait. There was enough, meat on the bones with this deal, and we helped. Like, how many people did we help? There's probably like 3 or 4 people. The private lender, the seller that we got. Well, the relationship with a cream member, we're gonna take care of. So it's a referral deal. We spent 0 marketing on this, and then we sold it on the. Actually, we sold it to one of our buyers. I don't know who the buyer is. Maybe Dave does, but it's going to be a rehabber buyer. Could have probably listed it on the MLS, but this is like a fast transaction, a fast transaction that we wanted to get done. We wanted to help the seller get it done. We got it done with the private money. And then as a company, we have a lot going on. So our crews are tied up. And so we went ahead and flipped it. Now, could we have made 30 or 40 or 50 in the back end? It's all subjective. It didn't happen yet. It could be argued that, but we are moving on to the next one. We have another deal that we will review. But again, follow us. I'm at RJ Pepino. IG is way friendlier than all the other social medias that I have. Follow me there. Follow Dave at The Real Dave P. Stay tuned for what's coming up. We're planning an event and a workshop after that event. I got some really cool things coming for the cream. Some really great new content that's coming out. So don't miss out on that. Continue to follow us. Hit us up if you need anything. See you on the next video.